Hi, this is Binu Joseph from Inditrade. This week the main triggers are some key data from Indian economy and the developments in the US over the debt ceiling. The US government is one day away from a partial shutdown for the first time in last 17 years, with no signs of compromise among the lawmakers over a government funding extension. Everybody looking for a last minute deal by midnight Monday. If the US government does a shutdown non-essential operations on Tuesday, then it could affect global equity sentiments. However, there are only limited economic impact from a short period of shutdown. The Asian markets are down at the start of the week due to a lower China PMI data and the strengthening of Japanese currency. The RBI will declare Q1 current account deficit numbers on Monday 30th September. India's current account deficit is likely to widen to $23 billion in April-June from 18.1 billion a quarter before. The current account deficit is unlikely to slip below 5% of GDP, and if that happens, it would be a positive surprise. The Controller General of Accounts will release the fiscal deficit data for April to August on Monday. The government's fiscal deficit during April-August likely to be more than 70% of the budget target in FY14. If the number is above 70%, which is for just 5 months of financial year, looks negative for currency. Core sector growth for August by Commerce Ministry also will be released on Monday. The HSBC India Manufacturing PMI for September will be released on Tuesday, and HSBC Services PMI and Composite PMI for September will be on Friday. Thus, this week's economic data provides a short-term health check of the economy, which is very crucial factor for determining the currency trend and thereby stock market in the following days. The Indian markets remains closed on Wednesday 2nd October, and European Central Bank will announce its interest rate decision on the same day. If the US government shutdown is avoided, Wall Street will focus on the critical September jobs report, which is expected on Friday. However, if the government does shut down on Tuesday, the Labour Department said it will not issue its monthly employment report scheduled for next Friday. Throughout the week, investors will continue tracking debt ceiling negotiations in Washington. Congress must agree to increase the $16.7 trillion limit on federal borrowing. Failure to by October 17th-18th would lead to an unprecedented US sovereign debt default. Most investors expect Congress will strike a last-minute deal to raise the debt limit. Now, a technical outlook on Nifty. The momentum indicators on daily chart suggest more downside for the market. The RSI is at 53 and has been in a continuous downtrend after touching the upper Bollinger Band. Now it's below its two short-term moving averages. The MACD is on a MACD in a negative signal crossover from the top. The slow stochastic also shows a downtrend after a signal crossover from the top. Last day on the previous week, Nifty closed below its 200-day moving average at 5841. The critical support for the week is at 5740. And if the benchmark closes below 5740, the market trend could the weak trend could intensify, as it is a 61.8 retracement of the previous market movement. Below this level, the next possible support is at 5630 level, which is the 50% retracement of the previous market movement. The major short-term support is at 5510 level. On the other hand, if US political uncertainties resolved, then during a rally in global markets, Nifty could face resistance at 5935 level. The major short-term resistance is at 6091. Thank you for watching the video. Disclaimer.